All right, so it looks like we're live. I'm going to give some time for some people to come in. So, guys, if you're managing to watch this on Facebook, come into the YouTube channel. I put a link in the Facebook page so that you can come in. It's going to be much easier to talk to you guys as you come in on the YouTube channel rather than on Facebook, just because the software shows your name and everything. So, we're going to be able to have more of a conversation as you guys come in here. So, it's going to be good. So tonight we have Jason Bond back on the channel. So this is fantastic. This is recorded, so if you guys want to come back and watch this, or if you're watching it at a later date, hopefully this will be useful. So welcome back to the channel, Jason. It's good to have you back.
Good to see you, Russ.
Yeah,
how you doing tonight?
Yeah, good. And so it's been 3 months since we last did a session, and that was with Wall Street Bookie, right? So
yeah.
We did this, so I don't know if you can see my screen at the moment. So let me just get rid of the live stream here. Let's go over to here. Just add my screen here, guys, so just bear with me. Just take me a moment just to add this in. So
man, it's hard to believe it's already been 3 months.
Yeah, I know, it's crazy. It's really crazy. So so I'm just gonna add in where we did Wall Street Bookie before, if I can find it. I had it up. Let me see. Here we go. So it was this one. So if you guys remember, we did this Wall Street Bookie where we talked about Jason's options trading. So bull puts basically. So, and you're still doing that, right? It's just it's kind of like another service compared to what you're doing with the lightning alerts. So
selling options is totally different than buying penny stocks,
right.
As you know. But we still have the bookie strategy going. I'm actually doing a little, I guess I call it a journey. I've never done a small account. Never going all the way back to when I was a school teacher. You could count that, but ever since I've gotten going under Jeff's mentorship, I've traded, something more than what I consider a smaller account, like $2,000. So I'm trying to do 2K with bookie right now.
Right.
And see where it goes. No promises, but I think it's the perfect strategy, at least of all the strategies I know, to try a $2,000 account. A lot of people think you can't sell options with a small account, but it's not true because I do spread trading, as you know. So it's a $2,000 margin account is what's required. And this isn't how I trade small caps, and certainly not how I trade the bookie strategy with a larger account, Russell. But I'm putting the full 2,000 into each trade. And if I lose, then less. And if I make money, then I roll the full amount into the next trade. There's a lot of reasons for that. We'll see how it goes. It might go bust. But I think of all the strategies that I know, it's probably the best suited for something like this. I've never done it before. So that's kind of what I'm doing with bookie right now. And I'm sure you saw Jeff teamed up with me on bookie. He sells a ton of spreads. He does a ton of spread trading. Well, that's not a part of his bullseye service because that's options buying. So it seemed like a perfect fit for he and I to team up on bookie. So he's kind of doing the active trading with bookie right now, and I'm doing this $2,000 journey.
Sweet. Yeah, and I saw it was up 50% already, so it's pretty exciting.
Yeah,
and,
3,200, I think. A 50% winner and a 65% winner out of the gate. I'm going slow with it because, one mistake and the journey falls off a cliff. So, but, being the seller in options has high probability to begin with. So that's kind of why I think it's really well suited for this. And I just want to see where it lands, and then I'll go back to trading a larger account.
Yeah, definitely. And so I'm excited. So I was following your bookie for a while, and then I switched to lightning alerts. And that's what I was hoping to talk about tonight. Just how different that is, but how similar in some ways. So I started penny stock trading around about the same time that you did. I prefer small cap, actually. Penny stock gives it a bad name, right? It feels like some sort of sketchy thing. So small cap trading is probably the best. So I've been options trading for the last couple of years, but I started off similar to you with small cap stocks and swing trading them. And, watching you and taking some of your trades on lightning alerts has actually been kind of a blast from the past for me, where I'm like, wow, I'm actually getting 10%, 20% that aren't options trades, where I'm not having to worry about the Greeks, when I'm not having to worry about time decay, and all this sort of stuff. And it's kind of taken me back to those days where it's actually really fun to not have to worry about all that stuff. Just is the stock going to go up or is it going to go down? So
right, the economic calendar, what are interest rates doing today? Oh my goodness, I forgot the Fed is speaking. What are the ticks? Right? When you're trading options, it's a much bigger game. It's a lot harder. Selling options, I got to be honest with you, I don't selling options in the bookie strategy. I don't follow as many of the things that are necessary if you're buying options. Many of the things that you just mentioned. So yeah, penny said it's refreshing in that regard, and I hear you. Small cap penny stock. We're talking about stocks under 10, tons of liquidity, sometimes as much as some of the biggest companies in the world. So liquidity is not an issue on some of these names, especially if you started around when I did then. So around 2010 or 2011, somewhere around there.
Yeah, I think so. Yeah, it was about that. Yeah.
Yeah. So the game has totally changed. It's crazy, but I think small cap trading now is so popular after the whole Reddit boom, the Wall Street Bets thing. It's transformed so much from when I first started, when I left my teaching career in 2010, 2011, and I love it. For example, one thing I've noticed that's changed, it would never be a good service, but there's a market at 4 a.m.
I know.
Like Eastern.
Yep.
Yeah. So there's so many people in different countries trading the U.S. exchanges now that at 4 a.m. for them, sometimes it's lunchtime. So it's perfect. So you see a huge burst of liquidity at 4 a.m. and then again at 5 and 6 and 7. These things didn't exist at all when I first started.
No.
So and brokers, even here in the U.S., will let you trade as early as 4 a.m. So it's not a part of my strategy, but it just illustrates there's so much more liquidity. There's so many more ideas, and there's a lot more action than there was 10 years ago. So that wasn't really good in 2022 because of the bear market. Right. If a stock had good news, a $3 stock, and it jumped to $4, shorts pounded it. Insiders and everybody else were trying to get out just because the market was so bad. Everybody's trying to raise some money. So nothing would run. And shorts knew this, and they would pound on anything that popped. But towards the end of 2022, I hadn't been doing a lot of small cap trading, but I noticed a shift where you would see a stock jump 50% today, and tomorrow it would be up another 100%. That was totally different. We weren't seeing that in 2022.
Well, that's good. That's good news. So yeah, I'm excited going ahead. And thank you very much for joining me tonight, because one thing that I've noticed following lightning alerts is just how much work you do. Like, you are on camera talking to people, answering every single person's they'll ask stuff and you'll answer it straight away, nonstop, all day, every day. And I've never really seen a service or, a person do this is to the extent that you're doing it. So I really appreciate you taking the time in the evening after the market's closed, because I see you starting like pre-market, and starting all these things. So yeah, guys, I see you all joining. So as you join, just let us know if you have any questions as we go. The outline tonight is really just to kind of pick Jason's brains a little bit about some of the penny stock stuff he's been doing, maybe show a couple of examples, talk about lightning alerts and kind of how the whole sort of service works. Like I was saying, I've never seen somebody like Jason who works so hard to do live streaming where he's basically talking about every trade. If you're new to small cap trading, I've been sitting in the room with you, Jason, and you're answering everybody. So if somebody has a question I'm not sure, is this line of support here? What should I do with this trade? You're right there to tell them. And that's something you don't really see a lot with a lot of services. You're not sending out alerts like in the pre-market day trades or pre-market trades. You're actually there holding their hands, which is something that is really quite impressive. So yeah, and so I was curious if we should talk a little bit about the basics of what you do with penny stocks. I know you use three main patterns, right? You keep it really simple. So you use there's the fish hook, right? The fish hook comes up quite a bit, and then there's the rocket or the breakout.
I used to love fishing, so.
Oh, is that right? Okay, yeah. And something that came up this morning, which was interesting, was how do you know if it's a fish hook or if it's a bear flag? I noticed this morning on the one that we were trading. So I think, was it the one we were trading?
Yeah, so BTB was the one that came up in question. Yeah, and so for anybody who's new, a fishhook just is what a breakdown chart pattern looks like, and so it's usually after a company has horrible news. If anybody wants to pull up the chart BTB, you can see that. And I think it's a Bitcoin miner, Russell.
Yeah.
So, anyways, huge drop recently, and the way that so as you noted, 3 patterns. It's really just breakdowns and breakouts. And there's a reason for that. I'm trying to teach people to find 20% winners as consistently as possible. We see some small caps go up 100% every day. And people get it in their head that maybe they could capture that every day. And I will tell you, after 11 years of staring at small caps almost every single day, it's impossible. You can't consistently find 100% wins in small caps in a short period of time. For me, Russell, a short period of time is 1 to 4 days. But what I have proven is to be able to teach people how to look at something that's going up 50, 70, 100, sometimes even 200-300% lately, even more, and try to get the meat of that move. Sometimes it's more than 20%, but I think that's the easiest way to look at it, is like, look at something that's likely to run a lot and just accept the fact that if you can get the meat of that move and then go find something else that is likely to run a lot and get the meat of that move and manage your losses in between, it ends up being a really awesome strategy. Does that mean people will make money? Of course not. But I think there's an edge here, and anybody who can be disciplined and follow their trading plans will start to understand what's going on, which is why I put so much time into teaching, because I believe that what am I looking for? Pay it forward. I'll reap what I sow, right? So by spending all of the time to make sure people understand this through the live streaming, just like this, while we're doing it live, I'm laying the foundation for people to learn, understand, become what's the word I'm looking for? Hopefully become proficient, right?
Right. Absolutely.
I want people to do well. And if they do well, then they're happy to share lightning alerts, me, with other people.
Yeah, and that's been happening. I've seen a growth in the service since I started paying more attention to you as well. So we have our first question, which is probably a good way to start kind of talking about this. Is Tom is asking, he says he's always heard that trading penny stocks is kind of like throwing spaghetti against the wall. Not true now. Well, I think you're probably a good person to answer this. But in some ways, penny stock trading is very predictable because the patterns actually work really well. So I was wondering if you have a comment about that to sort of kind of set the stage here for why penny stocks or small cap stocks.
They do get a bad name. There's a lot of bad actors in penny stocks. They definitely get a bad name. I was just reading tonight that Pelosi sold his Google stake before the antitrust news came out. Right. I think there's nefarious. I don't know if that was purposeful or not. I think the media likes to run with that story. It's Google, right? I don't see it being a big deal. But anyways, the point is, between dark pools, insider trading, there's any area you look at, large caps, small caps, there's going to be pros and cons. So as far as spaghetti against the wall, I think you hit the nail on the head. To me, and I often refer people to the David and Goliath book. It talks about valedictorians going off to college. So high school valedictorian, top of their class. And they feel very important about that. They're a big fish. Then they go off to an Ivy League school, and everybody there is a valedictorian. And so all of a sudden you have your top third valedictorians, you have your middle, and you have your bottom. And the bottom are the best, still like the best of the best, but they perceive themselves as no longer being valuable. What the book goes on to say, it's by Malcolm Gladwell. What the book goes on to say is there's actually a theory that it's called big fish, small pond. So it's pretty well documented that for psychology of doing well with things, it's better to be a big fish in a small pond. Mm-hmm. So penny stocks is nice because you're not competing really with Goldman Sachs, and you're not competing as much with algorithms. So there are pros and cons everywhere. But one nice thing about penny stocks, and I've traded options at a very aggressive level. I've traded small caps at a very aggressive level. I've day traded aggressively. I prefer swing trading, but I've tried a lot of different things. And what I've settled on is there are two things that I think a retail trader like myself, a little guy, has an edge in, and that's small caps for a lot of different reasons, and selling options for a completely different strategy, but for a lot of different reasons. And really, they both come down to probability. I think you have higher probability of being successful. It's not a guarantee. This is my personal opinion. Trading small caps, specifically swing trading them. Certainly long-term trading is a lot easier than any form of trading, right? Because time, but I don't find that to be exciting at all. I use the Vanguard Total Stock Market Index Fund for that. I'm looking for quick action now, but not really day trading. I find options trading, buying calls and puts, low probability. You have to have big wins to offset the large amount of losses that you're going to take, even if they're only paper cuts. They chew away at the account. So I think small caps, penny stocks, certainly for many reasons get a bad name, but also for many reasons should be something that most people at least look at and ask themselves, is this a good fit for me?
Yeah, definitely. And I always remember I started with people like Tim Sykes and things. They're like, never buy penny stocks for the long term. They're all going to go down eventually, And I never did. Never held any penny stocks, but I've made money trading them. Like same with you. And I think they're one of my favorite things now. And I think what I really have enjoyed after switching to options for so long is having the ability to trade them pre-market and after hours. Like you don't realize, right? If you're doing it, if you don't do options and you're just doing these small cap stocks, you don't realize the beauty of being able to actually sell these things after hours or pre-market or buy them, right? And then it's a beautiful thing, So one thing I really like about Lightning Alerts, so this is your small cap swing and day trading service, is it's for everybody. It's what I'm finding is if you work a full-time job, you can go pre-market and you can spend 2 hours with you and 200 other people that are excited about being in trading it, and you can trade pre-market before anybody gets up, and then you can go off to your day job and do your work. So I think that's something that that you can't do with options, right? And you can't do.
No, you can't. A lot of people don't know you can't trade options until the cash session. So that's 9:30, and then that's done at 4. So small caps, any stock for that matter, as early as 4 a.m. now, depending on the broker, and as late as 8 p.m. And again, people laugh, but there's a market at 4 a.m. and I'm up at 3:30 usually. I've been sleeping in lately to like 5. I got to be honest. I've been working longer hours, Russell, but as you pointed out. So I've been sleeping in a little, but there's a market at 4. I wouldn't ever run a service at 4, but yeah, it's fun. And what's really cool, and most people don't understand this, and here's one of the reasons small caps, penny stocks get a bad name. People often chase them because they kind of run through FinTwit with financial Twitter, Discord, social media, Twitter, StockTwits. They run through social media at a ferocious pace. This didn't exist 10 years ago, but it is the way it is now. And the problem with that is they're just like, if good news hits on a stock, there's a way to find that before that information disseminates across the internet. But the problem with penny stocks is it does disseminate, and people get that information too late. They get attracted to the excitement of it all. We call that FOMO, fear of missing out, and they chase. And then it dumps. And then the next word out of their mouth is, "I'll never trade a penny stock again. They're nothing but pump and dumps," right? So, but that's kind of why it happens. The dissemination of news trickles out, and if you're getting it last, you're usually about to become a bag holder.
Yeah. And so this morning we did a trade in the Lightning Alert service, and we're going to talk about that a little bit, and we can, because that's a perfect example, right? It spiked up, it came back down, it based. So let me pull that up. So as I'm doing that, the idea here is like Jason runs it's like 5 services in one, really. Like that's what it comes down to. So we're going to talk about the pre-market day trading, but the core of the service for Lightning alerts is swing trading, and we can talk about that too. But I was thinking it would be a good place because some people are asking, is it day trading? Is it swing trading? Can you cover some of the entry signals? So I think this one that I'm going to pull up is going to give you guys a bit of a taste for like just an average morning. Like it's literally just this morning. I'm going to pull up on my brokerage right now.
I want to clarify something. I'm not much into day trading, guys and gals, but there are specific times of the day where it's almost like you can package up a swing trade in a couple of hours. So it qualifies as a day trade. But if it works, it should move so much, there's no reason to hold it for 4 days. That's right. I think, Russell, that's why I think some people get confused with what I'm doing there. But, I call it lightning strike, used to be daily strike, but I'm looking for one stock that I think could go huge. If it does, then, I think it's wise for people to put fish in the boat when they got a big one on the line. You know what I mean? If it snaps the line and gets off, you're going to be really disappointed.
Yeah, and so this is on the screen now is FWBI. That was this morning. This is the 1 minute chart. This is pre-market. So you can see it had this move. Honestly, didn't join you guys until probably around here somewhere. As it was starting to base. So I don't really know like what the news was or whatever that caused this big spike. But
it was good news. They definitely had good news but there were some underlying issues. I think one of them was the dilution risk here was high. So my thought on this trade, without having the fundamentals in front of me, but I'm almost certain that was it. My thought was this is probably going to run this morning, but I'm not going to want to be in it overnight just because if it does go up 100%, 200%, we might see an offering. Sometimes they do it the same day. I saw one today, Russell. Stock was up big in the pre-market. We were actually looking at it, but it felt heavy. It had good news and it wasn't running. Anytime you see that, usually somebody's in the backdrop shorting against the price action because dilution is coming. So I can teach people what that is if they don't know, but just think of it as an anchor on a stock. You see a company has great news and it's just not going up. Somebody knows something you don't, which is bad news is coming right behind the good news. Anyways, with this one here, it spiked. We got to it in about the first minute or two and came to the realization that it would probably go to, I think 7 is
up here somewhere.
And that's pre-market where it goes from gray to black. Am I right? Because it rallied right into the open.
Right. So this was where a lot of people that were in down here were selling before the open, I noticed. So they were getting $7 and people were getting in around the 550 mark.
That's
that was
right.
Kind of, and so it was
within 2 minutes. Within 2 minutes of the news, we identified 550, 580, I think is what I said. Don't quote me, but it was around there, would be where we want to look for retracement. So if people don't understand, that initial spike is caused by really quick day traders who read every single headline and they use hotkeys to jump into the headlines. This is very dangerous. I'll explain why. But that's something that people do. Also, algorithms read these headlines and do the same thing. So those first couple of minutes are very liquid and often go straight up for 2, 3, 4 minutes. But then in minute 5, 6, 7, they retrace. And that's where we want to be. That's long before the internet is picked up on the news. And often, and Russell, I'm sure you've seen this, often some of these trades go on to be the biggest day's movers, up a few 100%. We've even seen crazily, and this is not part of the strategy, but one of them, it started at about 40 cents. In the first minute, it was already at 56 cents. We caught it about 5 minutes in. It was still around 56 cents, ended up going to 450 and closed up 1,000%. So that day, it was AM. I've never seen that before. But I think that's because we're going from a bear market to a bull market. So shorts are getting trapped in some of these spikes. Anyways, with this one, that 550 retracement was very good risk reward. The news was still good. We thought it would be a gap and go. an opening range trade at the 9:30 open.
Yeah.
And sure enough, didn't even have to wait till the open. It ran into the 9:30 open. And as you noted in the room, we saw a lot of people exiting because they know if you got a nice fish on, you don't get to eat it unless you put it in the boat. So we're pretty disciplined about teaching paying yourself, right?
Yep.
Not a financial advisor, but this is trading, and you can't win on a trade if you don't close that trade. And once you're into a winner, the easiest thing to do is to get greedy and let that fish snap that line. You don't want to do that. You want to get in the boat, club that fish over the head.
That's right.
Keep that tuna.
Yeah, and this is what I love about your service in the mornings. Is like I'm just sitting there and I've been doing this a while, but you've always got some good insight, and there's always people asking questions, and you guide them through it. You're like, look, guys, if it holds this kind of level, we're probably okay. And then and you were right this morning. It just took off, and people were going from the 550s up to $7, which is nearly it's like 20%, 30%, maybe. Like so.
Yeah. That's all you want to look for. It's like that news that comes out early. It triggers the trade. That's all that is. And see, companies just want to get their news in front of the most eyeballs as possible, because like we saw with the naked short selling stocks recently, companies want their stock price up. They need it up so that they can do offerings, because small caps aren't profitable. And by the way, to the gentleman who asked about spaghetti on the wall, they're so predictable. You have to understand something. They have to get their stock price up to get off of a baby shelf and onto the big boy and gal shelf. All right. And that is a big offering. So imagine if you're a company spending $20 million a quarter, right? You're burning $20 million a quarter, but you're not profitable. Well, you need money somehow, so you sell stock. Well, you've got to get your stock price to a certain level, usually with your shelf, to get away from a baby shelf, which could just be a few million. That's not going to help you out if you're burning 20 million a quarter to $100 or a $200 million shelf. So they have to get their stock price up. This is why the CEOs are complaining about the naked short sellers. They can't get their stock price up, so they're being driven to bankruptcy. And because they can't get their stock price up, they can't do big offerings. Now, offerings ruin the trade, but it's predictable. You know that the stocks are going to run on good news, and then you know that they're going to dump. And that cycle is what a lot of people don't understand and get buried in small caps and get a bad taste in their mouth. So we know right away when we look at trades like this, is dilution coming or isn't it? I mean, we don't know, but there are things you can look at, like their cash position, how much money they burn a quarter, how much money then they have left on a month-over-month basis. And we can say, okay, these guys have 36 months of cash left. We're not worried about them doing an offering into a 100, 200% move. You know what I mean, Russell? Like that is the game. It's a game of cat and mouse. And so if you understand the game, then you can start to harness the power of it. And that then becomes, I think, powerful. That's where people start to realize, oh, wow, I have an edge. I understand the capital markets, essentially.
Yeah, definitely. And so this was a pretty typical example of a pre-market. It wasn't a lightning alert, I don't think. I think you have a term for that where it goes like 50% or something. But it was a fairly typical morning that I've seen, at least from my experience. Should
I explain what a lightning strike is in comparison to
this? Go
for
it. Yeah.
All right. So the reason it's a swing trading service. It's designed for busy professionals. I used to be an elementary school teacher. I couldn't watch the markets all day long, so all I could do was swing trade. So I've always taught swing trading of small caps. It's my passion. But when the Wall Street Bets crowd a few years ago really came on in force, the market started to get active at 7. There's a few reasons for that. A, many more traders in the market. B, brokers went to $0 commissions. So now what used to be expensive in the pre-market, because they would charge you extra to trade stocks in the pre-market before they went to 0 commissions, people just didn't do it as much. So there wasn't liquidity. Now there is. And so what companies are doing is they're releasing their good news at 7, 8, or 9 a.m. so that the world has time to digest it and it can disseminate across the internet. See, if you're a company, again, you need the stock price up because you're not profitable. So stocks under 10, small caps, generally not profitable and not cash flow positive. They need that price up. So think about it. If you're a CEO and you've got good news, are you going to bury it Friday at 7 p.m.? Would you ever do that, Russell?
I would, no.
Never.
Nope.
You want to release it at the best possible time. And that is before everybody's, drinking their coffee and coming online. So the CEOs will drop their good news. Let's say it's 8 a.m. The algorithms and the hotkey day traders pick up on it fast. You get the initial burst. That's very dangerous. I'll explain why later. But a lightning strike, and it's a silly name, but the service is called Lightning Alerts because the alerts are fast. Real-time education is important because these stocks move around all day long, right? Sometimes hundreds of percent. We want the information quickly if we think that we need to learn in real time. So lightning alerts, kind of like real time, quick education. A lightning strike is, okay, we've got great news, right? Once we have great news, we go through a 7-step checklist real quick. Great news, not puffery. Quick example of puffery. Company says, hey guys and gals, we ain't to deal with Walmart. That's the headline, right? Well, the algorithms spike the stock and the hotkey day traders who just read headlines buy. Stock goes up. If you're not educated, you chase that. You get bagged. Why? Because once you open up the press release, it says, we're now offering our product in Walmart's online store. Puffery. They've attached their name to a big company, spikes the stock for a second, but the stock's not going to run. There's really no material change in the fundamentals. Conversely, the other day we saw a stock SMMT in the lightning strike 7 to 9 a.m. Session. By the way, Russell, like you said, busy professionals. Ira comes in almost every morning. He's a dentist. Doc comes in almost every morning. All sorts of busy professionals, teachers, lawyers, doctors in there in that 7 to 9. Then they go off to work. They always say goodbye once we're done. But what we're looking for, SMMT would be the ticker. Go back to that first day on the daily chart. That looks like an intraday chart. If you want to go 1 day, maybe 3 month, we'll see the day that one spiked. They announced a $500 million upfront payment with potential for $4.5 billion afterwards. All right, yeah, there it is back there a couple of weeks ago. Yep. Yeah. So right back there, I think it was middle of December maybe. So this stock was trading, I think, at about 60 cents. We caught that news immediately, and we knew right away that headline, it was a $200 million company at the time. A true small cap is a $300 million company, up to $2 billion. Anyways, so it was just under a true small cap. We call it a micro cap. This company, which is a $200 million company, got a $500 million upfront payment, a contract, with the potential for $4.5 billion more. So think about that Walmart example, right, Russell? Like puffery versus, whoa, market cap's $200 million, $500 million upfront, $4.5 billion possible later. Stock goes straight up, right? So we know right away, that qualifies as good news. The algos will treat it the same as the Walmart headline. You'll get the algos hitting the Walmart headline. You'll get them hitting this one too. Hotkey day traders, same thing. They just look at headlines. I don't look at the headline. I look at liquidity. So my scanner picks up on dollar volume. I want dollar volume to tell me that there's something happening, because I always teach people this. Markets are efficient. They price news in fast. Yep. That's why so many people are bag holders. They get to the information too late. I don't like to chase news, and I don't like to read headlines and try and predict if it's going to be good or bad. I've done that a lot in my career. I've tried it, sit there, read every headline, try to guess which ones are going to be big for the day, buy them in the first 30 seconds, and then you get bagged. You get bagged. Once in a while, you hit a big winner. The better way to do it is look at the dollar liquidity. So I scan for a certain amount of dollar liquidity from 7 to 9, and I teach people and I show people how we do it. So all I do is sit and wait for something to have $100,000 liquidity in 1 minute and jump 10%. As soon as that triggers, I check the news. If I've deemed that the news is good, and usually it will be to pull that off, you can't go from zero volume to 100 grand in 1 minute unless something good has happened. So the stock will spike. You read the news. If it's good, not puffery, step 2, check the float. If it's a small float under 10 million, it could run really fast. Check the short interest is number 3. If the short interest is high, there's a pocket of buyers that potentially are going to flood the stock. That means that it could run even faster. Doesn't mean it will, just means that it could. So now we know we have a fast car versus a slow car. So it's boom, good news. 2, what's the flow? Oh, it's small. 3, is there short interest? Wow, it's 30%. Number 4, and a lot of people get hung up on these steps. Good news, I don't know. Number 2, what is a float? Number 3, oh my goodness, I don't understand short interest, right? So a lot of people get stuck on the checklist, but I teach all of that. We don't have to do that now. But as we go through this checklist, invariably, we're walking through some of the most important things. Oh, I'm sorry. Number 2 is actually range. So it's 1, is the news good? 2, is there range? Can it run? Is there a lot? With SMMT, with AMAM, the range was huge. There was no resistance.
Right.
You knew that once it went, it was going to go big, right? This is what you thought at the time. You don't know for sure. So it's like 1, good news. 2, what's the range? 3, is there a small float? 4, is there short interest? 5, you got to check dilution. Are they going to do an offering? Because an offering is like wrapping an anchor around somebody's ankles while they're trying to swim, right? It's impossible. I compare it to a sprinter on a track versus sprinting through a pool. It just, dilution risk, if it's high, even if they don't do an offering, shorts are going to be attracted to it. They're going to pound against the spike. People are like me are going to be disinterested in buying it, so it's not going to run for a long period of time. People are going to jump out faster because they're afraid to hold it. So, oh my God, Jay, I'm confused. What's dilution? The checklist, once you know it, you can't unknow it. That's what I do. I teach trading. Used to be an elementary school teacher. Number 6 is once we get to number 6, so we've gone through good news. It's got a lot of range, low float. Maybe not. We don't write it off, but if it's low, it means it could go really fast. Short interest. We check the dilution risk. So we're going through essentially through these 7 steps, and we're making a trade plan. All right. Once you get to number 6, it's the number 1 question. Am I chasing at this point in time?
Right.
What you've just done is you've slowed yourself down from chasing that initial spike, which is going to be, it tricks so many. This is why so many people mess up trading. They have this fear that there's not enough time. Whereas, and Russell, you've seen this.
Yeah.
We sit there, and when the scanner triggers, we methodically go through the steps. And number 6 is, am I chasing? And that's going to be different for everyone. But if I've identified a stock could go up 300% on the day, and it's up 70%, I don't feel like I'm chasing. Because if I've gotten to that level, then I know it's probably going up that day and probably that hour, which is why we're able to take a 20% swing trade and crunch it into 2 hours. So a lightning strike is a methodical, slow, deliberate process. You get to step 7, you take the trade. And there's no, am I chasing? Because so many people struggle with the fact that, to some extent, the scanner doesn't even go off until 10% up. A lot of people are like, I would never buy a stock up 10%. AMAM went up 1,000% that day. PHVAS went up 400%. SMMT went up a few 100%. This one went up about 100%. Over and over and over, we see stocks that end up going, if it's a lightning strike. You don't see one every morning, but if it's going to hit, it's usually going to be before 9 o'clock because the company is going to share that great news at that time, so the rest of the world has all day to chew on it. I'm sorry, Russell. I get really excited about this.
No, I know you do. Absolutely. I love it.
Well.
I love it. Yeah, no, totally. And so, so you went through your rules there, and you pound them into people's heads every morning, right? I've seen you do it. You're like, this is this. Nope, nope, nope. And you're giving that one-on-one attention to people that is like, it's just brilliant. I mean, I've asked you questions in there periodically, and you're on it within a few seconds. Usually, like, nope, this. And so I think it's important. So we're talking about the lightning strikes at the moment, which is the pre-market stuff. So if you guys are looking to day trade pre-market, that's fantastic, right? It's fun.
Yeah.
You've got this community.
It's just one, too. I mean, there's a lot of active guys in there, probably you included, and gals, who really get after this stuff, and they'll take the in-betweeners too. So we'll come across a trade that meets maybe 5 of the criteria, but not all 7.
Right.
They still go up. They often still go up. They just might not be something that's going to go up a few 100%. And by the way, we're not gunning for a few 100%. We just want a lot of room for error.
Right,
We're
right.
looking for something that's likely just going to run and run and run and run because if we're going to buy a stock up 30% in the morning, we want to feel comfortable that it's probably going up, not coming back down.
Right, definitely. And so that's the first part of the service, which is awesome. And it's great for
Yep.
people that just want to set that time aside in the mornings. And then when the market opens, you're doing this gap and go, which is a fairly well-known strategy, right? Like gap and
Yeah,
go.
opening range trade. Yeah.
Yeah. And so I know people do it. I've done it myself for a bit. It's great. I've been enjoying that. But I think what's pretty valuable to a lot of people is the idea of the swing trades, right? Because I
Yes.
just saw a comment saying, I'll put it up here if we can see it. What is the success rate for winners with over 20% gain, roughly speaking? And I think this person's talking about in general, like so day trades and swing trades. But
Sure.
actually, somebody has mentioned swing trades. So I guess giving us kind of an example, like maybe of a recent swing trade, I took a couple. This was one of them, ATXI. I also did PMTO as well recently. Sorry, TMPO.
Yeah, Temple was a good one. Yeah. That
Shall
was a
we have a look at
monster.
that one?
I
And
think I
say,
exited that one. I don't remember exactly, but it was over 20%. The goal on the swing trades, and by the way, lightning strike too, that pre-market trade, it's always 10 to 20%. So you shouldn't really be hitting above 20% often because I don't believe that you can. So now with options trade, if you're buying calls or you're buying puts, of course, right? But your probability of winning is not high when you're buying an option. We know that the seller has a distinct advantage right out of the gate, hence the Wall Street bookie strategy. So yes, in options, you hear about people hitting 100%, 500%, 1,000%. It's not possible, in my professional opinion, swing trading stocks in 1 to 4 days. Like by definition, a swing trade, you buy it today, you're looking to sell it for some sort of favorable exit in 1 to 4 days. Well, what is that favorable exit, right? This is a common question. So we do see in the lightning strike service, consistent stocks run huge. That's the goal of the program. Would you catch 1,000% runner? I think it would be like getting hit by lightning. So while a stock can do it, you're not going to know at the time that that's going to be the one, and you're going to really struggle at 50% not to take that win because you know how uncommon it is. So to answer the gentleman or woman's question, the goal is 10 to 20%. So you should be exiting swing trades based on what I teach. Not a financial advisor, but I don't think you can consistently get 20 to 50% in 1 to 4 days. So you might say, okay, well, I only want 50%ers. I don't teach that. So I wouldn't know the data, but I don't think a win rate I don't think I can give you a win rate for anyone specifically because it wouldn't be fair. Mine would be different than Russell's. Yours would be different than mine because everybody's schedule is different. In other words, they're small caps. Look at the chart here. They move around a lot. So I might exit a trade at 28%. You might exit it at 35%. An hour later, somebody else might have exited at 10%. You know what I mean? They move around a lot. They're swing trades. The alerts are real time. But again, the other day, TMPO is a perfect example. Russell, I exited for, I want to say like 25%. And it was up like 70% an hour later. And
like I'm trying to remember what day it was. I think this was around where you were entering.
Okay.
Because we had a day where it was just kind of flat. I think this was only about a week ago, but it shows how bad my memory is. And then it really took off. And so like this may not be.
I got out around I think 210. Early in the morning on that day where it went to what is the top there? 290s?
288 or 290.
288. Yeah. So I was out for somewhere around 20%. I believe we could check the journal. It doesn't matter. The point is it kept going higher. So I got the alert out. It just kept going higher. But then a few hours later, it rolled over. So it had a $3 upgrade. We were already in it. And then an analyst gave it a $3 upgrade and it caught some momentum. And I sold somewhere around my 20% goal, right? And so that's what I'll do if you're in the service. I send an app alert it shows up on your phone just like a text message. When a stock gets into the 10 to 20% range, I stick to the rules as the teacher of the service. I send the alert before I exit. So I let people know I'm looking to sell. We've met our goal. It's either the first goal 10% or the second goal 20%, or we've exceeded the goal. And we've had some of those recently. CNN was one of them. This was one of them. So those alerts would say, hey, guys and gals, we've exceeded our goal. I'm jumping out. Everybody else can do what they want. So every trade's going to be different, but every trade we're going for 10 to 20%. But you won't see, unless we get lucky. I have closed trades 50%, even more than that over the years. But it's usually you wake up in the morning, there's good news, and it's already up 50%. Right. It's right. I'm not letting them generally run to 50. If I do, it's like a quarter or half of my position.
Right. Yeah.
Hopefully I answered that well. If not, just shoot back more clarifying question.
No, that seemed good. So this was a good example, like 1 or 2 days, and it definitely took off quite nicely.
Yeah.
I played this one. I played ATXI. I think I always get the
ATXI was another good example. Yeah.
Yeah.
That exceeded our goal for the exit.
Yep. That was
pretty quick too. That was in the after hours. So
right.
That one ran at
That's
night,
right.
which is always awesome.
That's right. I sold it after hours. I was like,
yeah, you should.
Because the next day it was back down, I think. So
it was. I was up like, I think, I don't know, like 40% on that. I don't remember exactly. And I didn't sell it. I held it overnight, and I ended up with like 8% the next day, which is the perfect example to the gentleman who says, how many trades are closed at 20%. It's not as much as like trying to close every trade perfectly at 20%. Every trade has a 3% stop loss. It's not how it works. Every trade has a stop loss in mind. Every trade has the goal of 10 to 20% in mind. But as you can see with the chart, there's a fluctuation. So you might not get 20. You might get 7. You might get 13. I don't care what I get as long as it's green. I always say green's better than red, and evens it's been a long time since I said it. Green is better than even, and even is better than red. So once you're green on a trade, just don't let it go red. You can always jump back in later. Close it green. It does wonders for your confidence.
Totally, yeah. I remember jumping in this one. I think you release these swing trades usually in the mid-afternoon, right?
Yeah, exactly. We do that morning. Lightning strikes 7 to 9. So that works for day traders, but it works for swing traders like me too, because it's before the workday starts. So the room gets flooded. That's our largest attendance. Which makes sense, right? Before busy professionals go about the workday. And then once the opening range trade, the gap and go, gap recovery and go trade is done, then I'm really just focused on swing trades during market hours. To hit a big day trade, I think the best time to do it is what I've defined in the Lightning Strike program. I don't like spending the rest of my day jumping in and out quickly on small caps. It's just not my favorite thing to do. I like to buy and see if I can get that 20% in under a week. If it's overnight, great. If it's 10%, great. So, yeah, that's the rest of the day is swing trading, and especially at the end of the day from 2 to 4. Turn the camera back on. I'm on the mic, and we're looking for those gap trades, right? The ATXIs, the ones that might run that evening. Because nothing better than you get in a trade at 2 and you're out at dinner time, right?
Yeah, absolutely. Yeah, I was really happy because this was one of the first trades I've taken with you for a while, and I jumped in thinking it was going to be a swing trade, and then looked at it after hours, like I'm out. Like it took it up at the top there.
I know. I alerted everybody. For those of you who don't know, I was like, you guys and gals, you should probably consider paying yourself. I'm going to hold it overnight because I said it was a swing trade, but we've exceeded our goal. So
yeah, and that's one of the things that really impressed me, by the way, is the fact that you give these updates, like even after hours. It's not like you've gone and that's it. I'll see emails coming out, and you're like, okay, Jason's still on the ball here, still watching stuff. The market's closed. And that's something that's really impressed me, is the dedication to the swing trades, but also the day trades. And the fact that I know if something's moving, I'm going to see an email from you coming in. Like I know that you're watching this.
I'm in these trades. If they're running, or if they're running in either direction, I'm either winning or losing with you. I'm motivated to keep an eye on the ball. I want my service to be one of the best. So I'm motivated to teach in real time. And so that means paying attention. And I think that's why a lot of people like it, whether you're on a phone, a tablet, laptop or working in an office. I was an elementary school teacher for 10 years. If you've ever worked in an elementary school building, it's just one of the safest, just kind of quietest, most peaceful environments you can work in. And I treat my room the same way because a lot of professionals leave the mic on during the day. You can't have a zoo in there, or I can't be acting like a goofball on the mic if people are going to leave me on in their office. You know what I mean? So I treat it very professionally. I monitor everything very closely. And when there's something to teach in real time, I use, the Raging Bull app, which presents like a text message, except it's faster. I use email to teach. And I use the live streaming chat room, much like this little interview that we're doing to teach, which is very common nowadays. But to your point, there's very little that I miss because that's my job. I take it very seriously. Again, I'm trading as a general rule. I'm trading my own money. I want to do well as a trader. I've won and lost as a trader. I understand what it's like to do both. I studied the psychology part of it hard. Yeah. And one of the best ways to execute your edge, which is nothing more than using your strategy in a disciplined way, is to be disciplined. Yeah. And so that means whether it's some sort of an alert that tells me the stock has exceeded 20%, or I'm just physically watching it. I think that's important because then I can communicate, like to you that night, hey, we're past our goal. You do what you want, but if you're following what I teach, here's the exit. It's hit. Like, I don't care if you've traded $100 or $100,000. This is up 20%. You know what to do. And if you don't, you know what the risks are. The reality is to catch 20% in a short period of time isn't impossible. I've taught it pretty effectively. I wouldn't say that it's easy, but I would say that it's doable. There's no guarantee there, but I think if you watch me, you'll see how it works. And then you just have to figure out how to do it for yourself and then repeatedly. That's not as easy as it sounds, but it's doable. If I were sitting here telling you, hey, Russell, I've got this great strategy where, we look for 200% in 2 days, consistently. It's impossible. It can't be done. But 10 to 20%, you can look for those pockets. Some trades just end up fizzling out. They don't do anything. And that's okay. It's like going up to bat in baseball. You swing, you miss, and then the next time you swing, you hit, right? So a good strategy should hit enough to offset the ones that don't work out.
Yeah, absolutely. And I think that's one of the things I've really enjoyed is listening to your psychology discussions, the books that you offer like to people when, pre-market, we're always talking about stuff like that. So I think you're really teaching people how to fish with this service compared to just sending out like alerts. In fact, you don't even send out alerts on the pre-market stuff, right? You have to be in the chat room for the fast day trades. The swing trades, you do send out alerts and you send out a newsletter twice a day. You send it one out during the day.
Twice a day, usually 8 p.m. unless I fall asleep. But the schedule is 8 p.m. for newsletter 1. That's the beefier. I sit down. Last night, no joke. Sometimes it's 30 minutes, but last night it was 3 hours. I was in a zone. There was a lot of stuff to talk about. And I found 12 stocks that I really liked and I wanted to track. Doesn't mean they're going to run tomorrow. It's that I want them on my watch. And here's why. Sometimes it's just 3. Then at noon, another newsletter comes out. And that is just to address anything that has changed since the previous night. A lot happens that morning that I want people that may not be able to be in the room to know. So 8 p.m. and then again at noon. The noon one is really important because it sets the stage for the swing trades in the afternoon. Right. So I'm trying to teach people who have busy, busy lives, whatever it is, taking care of kids at home or, busy in the office. And so you read the watch list. I consider it a primer to what I'm about to do. Russell, here's one of the really cool things. I don't take trades. I don't alert trades to subscribers through text and email if it's not covered in the newsletter. So if you read the newsletter, you already know what's going to come. And then I alert people with text and email, and I don't buy until the email lands in my inbox. So you've got it on the newsletter, but then you get the text message and then the email. Once the email is out, then I look for my entry. So I'm not buying and alerting you and letting you know that I bought. I'm letting you know I'm about to buy. And then I always buy. There's no wishy-washiness. Even if the price has changed unfavorably for me, I buy, because I think there's no way I can teach if I send you an alert and then I don't buy. So
yeah. And I love that. And I think it's something that I've appreciated with the way you've gone over the years is you've switched to this kind of pre-alert sort of mentality. Yeah. And I think that's fantastic, because a lot of people, they have this idea that somebody like you is buying and then letting some other people pump up the price, and then you're selling into the price action. But anybody who's spent any time in your chat rooms knows that that's just complete nonsense. Like, it's just not true. That these are not responding to the chat room buying at all. I watched. They're not. You were just not enough volume to change the price in these things, and you're getting in after a lot of the time, and there's plenty of time for people to get in and out at better or worse prices on what you're doing. And it's not this kind of thing that people worry about, which with these small cap stocks,
options too, any form of trading, right? Minute to minute, the price changes. It is very common for the industry to buy then alert. I think most other newsletters do it that way.
Right.
It is more challenging to do all of this, to jump through all of those hoops and then look for your position, because by the time you know you want to buy the position, you usually want to buy it, right? So I have to be a little bit more predictive to try and allow for range. That often helps, because I feel like I can find better entries. And if it's a better entry for me, it's going to be a better entry for people trying to learn as well. A lot of people aren't actually taking trades. They're just learning, right? So they're paper trading, or somebody who's new might be trading one share, trying to demonstrate that right now to people, that you don't have to feel a sense of FOMO. But the point is, most of the industry newsletters, they buy, then they alert. I don't think there's anything wrong with that, but it has its pros and cons, some of the things that you mentioned. So to remove that barrier between me and the subscriber, the information goes to the subscriber first. Then I just figure out my entry from there. And I said, I'm taking my entry one way or another. I'm getting into the trade because if I send it out on an alert, I believe it's going higher. Even if I'm paying a nickel more 15 minutes after I've alerted everyone, if I believe it's going higher, I'm okay with that margin of error, because I just need to be right about it going higher. To me, that's the important thing. To me, I don't think anybody should chase, by the way. But if I've sent an alert saying I'm going to buy, once everybody has that information, I'm looking to buy.
Yeah. And this morning's trade, pre-market FWBI, was a good example. You were talking about 5.5 being the key level, I think, right here. And this is the 1 minute chart. So people had a long time to enter. It's not like you said you were buying here on the right and within 3 minutes it spiked, which a lot of services you do see happen, right? They're chasing momentum so quickly that it does get away. With you were talking about it back here, I think. I might be a little bit off on the time.
We talked about that all morning. From the first 2 minutes, I was on top of that one. I did not buy that. I will only buy the lightning strikes. A lot of people in the room like to play like 5-day trades in the morning. Who am I to say what is best? But if I'm going to do a day trade, I don't love the day trade. If I'm going to do one, I'm looking for the monster. And I can't get caught up in like the 3 that run 50%. Not that that's wrong, but just to be clear so people know. So I will go through maybe 10 different names in the morning. Most of them go up. A few of them pop and drop. We're usually able to identify that before they do that. In this particular scenario, we were on top of the news in minute 1, minute 2. So those early candles. And I immediately knew where it should hold if it was going to work. And it did. It was funny, actually. Carrie, a member in the room, said when it was in minute 4 or 5 and it was screaming higher, she's like, "Wait, I thought you said it's in play at 550." And I was like, "Just be patient." I was like, "Just be patient. Let the algorithms and the hotkey traders sort themselves out." Listen, if it runs straight to 10, it is what it is. We misread it. I didn't stamp it with lightning strike because it had dilution risk. I was fearful that an offering would act as drag on the stock. So once that's identified, okay, I'm probably not taking the trade, but that doesn't mean that this stock's not going to go up.
Right.
There's a difference in something that's going to go up a few 100%. I'm still only looking for 20% in that. but I'm trying to give myself really high probability of actually getting 20 to 50% on that trade without rushing. So I go through the protocol. So in this scenario, we stopped at number 5 because they had a high cash need and I believe an active shelf. So I was worried about dilution. I can't remember exactly. But anyways, long story short, we did believe that it would run from 550 to 7 or 8, right? Yeah. So that was the conversation, Russell. And we map all of that out in the pre-market. Now, the swing trades, I'm buying. The lightning strike, I'm buying. The Monday movers, I'm buying. December, I did a few weeks of training only. I got bombarded with a lot of new subscribers. I want people to calm down and not always rush into trading. But, with all of these trades, the exception of, and I'm not doing 5-day trades pre-market. That's just not my thing. But a lot of people in the room, man, they got the hotkeys set up and they're in and out of these things. And as you saw, a ton of people hit this one. But Carrie was like, she was frustrated. You could sense that when it was at $6, is that $6.50? I think it's $6. She was thinking, I missed it. And that is what causes bag holders right there in that move. Yeah, what is that? Is that 6 or 6.50?
So 650 is right here. So it started to sell off around here.
Yeah, where it topped out on that shooting star. We called that top. We knew it was the initial momentum was done. Yeah. I was using the squeeze indicator to monitor that. It's just a simple momentum indicator. But we knew right there on that first red candle, okay, that was the top. But 4 minutes before that, she says, like, oh, how could you say 550, right? Frustrated. And then she ended up getting a nice win on that trade. She traded it from like 560 to 7s. Right. And I think she said she did a very small position. I believe this was the subscriber. And the point is, you're not supposed to feel rushed with any of the pre-market trades, but people feel rushed with this stuff and they make a lot of mistakes as a result of it. Russell, I don't know if you've seen this, and this is a common error with day trading. News comes out, stock rips higher, people buy it right away.
Right.
Often it's biotechs. They don't know what the headline or the press release means.
Right.
Unless you follow biotechs closely, which I generally don't. All right. It's a beast all in of itself. You're not going to know what that data, if it's good or bad, but the people who follow the stock closely will. The algos and the day traders will still jam that stock in the first minute or two. So it'll pop. You'll get excited. You'll chase it, but the data's actually bad.
Right.
So the stock comes crashing down. Today, a stock went, I think, from 3 to 6, and then maybe it was like 4 to 6, and then down to 2. All in a matter of like 10 minutes.
Yeah, and for you guys listening, this is Jason. This is what he does. Like this is the sort of information you get nonstop pre-market throughout the day on live stream, similar to this, right? During the service. And so you're always getting commentary and you're always getting questions answered. That's the other cool thing. So if you're worried that the stock seems to have pulled back down to this level that's shown at the moment on the bottom line here, you just ask Jason in the chat, you just go, hey, like, what are you thinking? And you answer, look, it's pulled back to Fibonacci level or whatever.
You don't even have to ask, Russell.
Right.
I'll let you know.
I'm
thinking the same thing. I just think it out loud. That's my job. Right. So I'll let you know exactly what I think is going to happen. I was not wrong on this one. In fact, I didn't think it was going to run from 550 until the open. Right. It just happened to run in that last 30 minutes and everybody exited that was taking the trade. A lot of people don't take those trades, but there's a lot to learn from that because your swing trades will play out the same way. I exited BBAI today for a win. That was a really good swing trade. There was a blog post out about some Department of Defense contract or whatever. We've been in BBAI for, I don't know, 3 or 4 days. Yeah, so that spike early in the morning there, that spike early in the morning there caught my attention. I think it hit 230. I want to say, I can't see the prices exactly.
Yeah, it's about 230 right here.
230,
so,
yeah, I ended up getting like about 212 myself, which was about 12%. So the 230 pop put me up 20%, but then it came in some. I got the alert out. As it climbed back up, I sold at 212 or so. And then it went, I think, to 250 or 248 later in the session. So that one, I think the entry was 192 a few days ago.
About here somewhere?
Yep, 192 a few days ago. Yep.
Okay, cool. So there was quite a pop the very next day, which is pretty cool. But I guess you guys still held it. And
I didn't sell that. I was looking for 250 on it. And then after I missed that move, because the market was down big today after Microsoft's miss last night, I thought, you know what? I've got a 10 to 20%er here. What's the rule? Market's down. I'm green on this trade. I'm gonna put that fish in the boat. So I was a little frustrated that it ended up hitting my target, which was 250. I wanted to sell it in the 240s, and I think I got like 212 or 213. And it ended up going there. And that's one of the reasons is the news came out, which was helpful. It drove it the rest of the day. But the market also recovered today. The IWM, which is a small cap index, was down 1.5%, almost 2% at one point in time, finished green. So there's a big move off the lows today in the market.
Yeah, for sure. And then, so I see another question from Ron. I spoke to him earlier. He was asking about the overall win rate. Again, we covered this a little bit in that this is really like a teaching service as well. So like Jason was saying, like somebody's 10% win might be another person's 20% win because of the way they play it. So it's very difficult to be pinned down to, oh yes, we win 85% of the time with every 20% winners or whatever. It's very difficult. And I think people that tell you that they have a 90% win rate and with every winner is 10% or something.
Well, I don't have 90%. I can guarantee you that.
Right. But being able to pin it down doesn't make any sense.
I've got a journal. I was using one of those journals where you upload your brokerage statement, but at the end of each month, I'm just going to load my brokerage statements to the platform. You can check it for yourselves, guys and gals. That's the easiest way. I stream my real money portfolio in the room. So the moment I wake up, usually 4 a.m., but sometimes a little bit later, I put the stream up. It's me in my office, the charts and stuff like Russell just had up. But I also put up my TD Ameritrade portfolio. So you see my positions.
Yep.
So you can track the win rate if you want yourself. I don't have an exact number and I don't want to commit to one because the world that we're in. But I know historically, like, a win rate for me that would be normal. Like if a month over month, year after year, like if I was to give you just an estimate, I would say somewhere in 60 to 70% range is about with this strategy. And I don't know. There are some guys who could be 80% as like really good small cap day in swing traders or 90%. But what they're doing is they're scalping. And not the bad word. People hear scalping, they think bad. What they're doing is they're in and out in seconds, minutes. They're not holding on to positions. So if you're going to swing trade stocks, and again, I don't have my exact percentage, but I could look back the last couple of years, and I'm sure it's somewhere between 60 and 70%, just like all of my trading. And whether I'm doing options or stocks, generally speaking, I'm swing trading. So I'm holding for multiple days. So I think, just any swing trader, a good percentage is anything over 50% because your losses shouldn't be as big as your wins or you're doing something wrong. You're letting your losers run wild on you when you need to be letting your winners run for you. Most people take bigger losses than they do wins because they jump out of their wins too early. I mean, type yes if this is you. They jump out of their wins too early. So I think a reasonable swing trader who is going to be successful, and I don't know if that's you. I consider myself very good at this. What somebody's definition of successful is one from another. I perceive it as being profitable. All right. So if you got a 50% win rate, but you're profitable, you've done well. But I know a lot of guys and gals who are like 90%, but only scalping. So I think if you're going to swing trade, it's probably going to land somewhere 50 to 70. Like if you're going to do it well, and I don't know if somebody will, but that's 11 years worth of teaching and kind of following a lot of traders and just knowing probabilities. So I would say that's probably a pretty good number. As far as my numbers, I'll post my statement at the end of the month. You can look through and do the math on the percentages if you want, and you can see kind of where I'm at. For me, really all I care about is, do I make money at the end of the year, right? I've had good and bad years. I can tell you this much. I find buying calls and options, buying options to be the hardest of trading strategies. I've had my biggest wins there, but also much bigger losses. Right. I find small cap swing and day trading to be much more predictable. It's just a smaller pond. So there's less that you have to know. I feel like it's easier to repeat. All right. That doesn't mean it's easy. It's just easier than buying calls and options. And then selling options would be the other one. But anyways, Russell, as you know, I've got the portfolio up so people can see it. It's transparent. You know what I'm in, how much, what price, and then I'll just hand you my statement at the end of the month, and you can look through it. All right. And if I have a bad year, I have a bad year. I'm a trader. If I have a good year, I have a good year. But I know one thing. I know what I'm talking about, and I can teach it to people. I have a master's in education. I love teaching, but I'll walk into bad trades. All I do, though, when I do that is I learn from it, and I try not to repeat it. So you read the Douglas books, you work on your discipline. There are no secrets in the market. There's strategies, some better than others. And then usually what it comes down to is a person's psychology. One of my top students, he was a perfectionist. He would not take a loss. No amount of loss was acceptable on any. He had I don't know what his win percentage was, but I remember it being in the 90s, upper 90s. Wow. He would not take a loss. He was ruthless about it. But he also was stressed out of his mind. I remember him telling me that he was quitting, even though he was very successful, because he was so fast to the hotkeys and so dialed in on not losing. I'm a little bit more relaxed. Like if I take a swing and I walk into some bad news, it's part of the game. But I am trying to succeed. There's a difference. I know how to hit hotkeys fast, but I don't want to stare at the computer that closely, you know? Right. And so I think that's a perfect example of where do you want to land as a trader? I like the activity of small caps. I love options. I just find them to be terribly hard. And I think you can lose a lot of money really fast. I've done it myself. I've made a lot of money there really fast, and I've lost it really fast. Right. I've found that in small caps, there's a better edge. That's just my opinion. I don't know. I don't know that that's fact. It's just my experience.
Seems to be, for sure. And so I guess to kind of wrap it up, so last year was horrible for a lot of people. It was horrible for small caps in particular.
Except
a lot of
short
people,
sellers. They feasted, and they deserved it. A 10-year bull market was too long.
Well, the only thing that was good for was selling options. That people were doing well that were selling options seemed to work well because it was kind of you were getting these rips, and then people were just they were going long, and then they would turn over, it'd go short, and they'd turn over, and it'd go up the other way. This coming year, so we've seen a good start to 2023. I mean, the markets. I was looking at the SPY, starting to look like we're seeing the golden cross on the SPY daily. Things are starting to feel a little bit more positive to me, at least. Where do you see things going in terms of the IWM and kind of are you optimistic going forward? Obviously, you don't have a crystal ball, and
I'm very optimistic though. I about 3 months ago I got lightning alerts up and going. It's basically Jason Bond Picks 2.0. I think it's much better. And Jason Bond Picks was wildly popular, thousands and thousands, tens of thousands of paying subscribers. But the point here is 2022 was my first real bear market. And what I realized was trading's a lot harder. We all know that, right? Everybody's a great trader in a bull market. Right. But when you actually go through your first bear market, I left my teaching career in 2011. So 2022 was actually my first bear market. I didn't count. 2020 was so fast. It was caught everybody off guard. And before you knew it, we were up 20%.
It's down and then straight back up.
Wait, that was a bear market? I was bear markets aren't bad. But no, 2022 was bad. And the reason it was bad was if you bought a swing trade on a penny stock and you actually caught good news, it was gone in seconds because shorts were all over it. Sellers were all over it. Just there were so many sellers flooding anything that was good. So as far as what I see, we know last year, toward the end of the year, the Dow Jones transitioned into a bull market. What's left is the NASDAQ, the S&P, and small caps. Bank of America had that really good report out back in November that said bull market's coming in 2023, just not where you expect. And then they made the case for small caps. Well, I read that article, of course, because I watched small caps religiously. 2022 just wasn't the time to attack them. Unless you were going to use a specialty broker and short small caps, it was a hard game to play. That was the first time in a decade that I'd seen that. And it really gave me perspective about how lucky I was to leave my teaching career in 2010, 2011. And walk into a 10-year bull run.
Imagine you done it in 2022. That was you starting out. You probably never come to anything.
Teaching. Right. I wouldn't have had a business. So, but I went a decade without really seeing a bear market. And then, so it was good to see one. There was a lot of pros and cons to that bear market, certainly more cons than I would like to reflect on. But that's because my bread and butter strategy kind of went out the window. You just couldn't get things to run. The news would be there and they just wouldn't run. So toward the end of last year, we started to see that change, and I picked up on it real quick. And I started pounding the table, telling people, hey, I'm early to this, but I'm going to spend the next couple of months teaching ferociously, so we're ready when it happens. We're not even in a bull market yet for the IWM, which is the small cap or penny stock 2000. But I think it's coming. The Dow already did it. Today we dipped, bought it right back up, right? Microsoft was down. The world was ending this morning. By the end of the day, Microsoft was green. Yeah. Tesla was supposedly supposed to do horrible, yet it was up in the after hours, and things don't look as bad there as everybody thought. I'm not a macroeconomist. That stuff's really important if you're trading, buying calls and puts. For small caps, all we need to know is that 2023 won't be a repeat of 2022. And I think that that's true. And again, I've never seen penny stocks run, like legit penny stocks, not some pump and dump. Right. I've never seen real companies run 1,000% in a day, in a couple of days, in a week. I think I've seen 5 in the last month, a few of which I alerted before they ran, which was great, right? And of course, nobody caught 500%. I'm positive. It'd be impossible because everybody would sell at 100%. But what that tells us is short sellers who were dominating spikes are getting trapped in spikes now. And they're not ready to give up on the glory days, which was a bear market. Just like when we went into 2022, 2021, I was like, I'm the best trader in the world. Right. And then 2022 came and I was like, I'm not a good trader anymore. What happened? And you don't know you're in a bear market until you're in a bear market. And bears don't know they're in a bull market until you're in a bull market. And that's why penny stocks are working again. Shorts are getting to the trades too early, and they're running day after day after day, which is what they did for the decade that I taught penny stocks. Unfortunately, we just had to have a 2022 bear market, but I guess that's a good thing.
Yeah, absolutely.
Perspective. I'm long-winded, Russell. Sorry, but I'm full 2023, and I don't think anybody disagrees with me on that, other than the persistent shorts. I know the headlines are out there, but what I care about is, do small caps run when they have good news? And they are. So what that tells me is that the buyers are back. All I want to do then is either go for that lightning strike or swing trade them. And occasionally I do some long-term small caps too.
Yeah, it's exciting. So, like, I'm definitely going to be following you more this year for sure. Like, I'm going to start following you a lot more. So, unfortunately, I made kind of a switch to options trading last year, and then like this year, though, I think you're right. I think we're in for a good small cap market. So
yeah, I do too.
Yeah,
I'm not a hater of options, just so you know. But 2023, my goal is not to buy a single option. I sell them in bookie because I think you have a mathematical edge, and I buy penny stocks or small caps like that because I think I have mathematical edges there, and I think anybody who really looks at those two things understands selling options. You at the onset of the trade, you have an advantage. You give up big percentage wins, but you have a mathematical advantage. Penny stocks, I feel like you have a mathematical advantage. So, like I said, I'm going to post my statements each month. We'll see how 2023 goes. But if I'm right and the small cap index triggers to a bull markets are usually about 5 years long. So we could have 5 years of this, right? We're not even in a bull market yet, but we're seeing small caps run like crazy. And we're not trying to capture 500% wins, but run like crazy means we can take swing trades and not have to worry about those trades losing their momentum every single time they start to work.
Fantastic. Yeah, I'm excited. So I'm going to be following you every morning. I've posted a link in the chat here. Just so if you guys want to join via my affiliate link, it's actually in the chat. At the moment, and this might change whether you're watching this in the future, I've been given a link to sell this for $77 a month, which is an absolute bargain, really. So give Jason a try. I mean, like, you'll not find somebody who is more dedicated to teaching, who will show you every single trade that's in play. You'll log in, you see it on the screen, like what he's in, what he's looking at, non-stop commentary as you've seen tonight. It's
there's coffee, I guess.
no lack of education going on as well. So I think it's worth a shot, guys. Like, if you're watching this and the link's still available, I'll put it in the description underneath this video once it's posted onto my channel properly as well. And I think it should be something to check out if you're looking for swing trades or day trades, pre-market, gap and go, the first hour of the market, but especially the swing trades, especially if the market continues into 2023. So, yeah, well, thanks very much, Jason, for joining me and sharing
My
all
pleasure,
this insight. It's been really great. So,
yeah, you're always a great time to talk to. I really appreciate it. And with regard to learning to trade new strategy, if this is new to somebody, if somebody's suspect on small caps, just either paper trade or trade one share, right? There's the room is flooded with new subscribers because the market is hot. So I'm getting the message out. We've got a lot of new subscribers, and I'm trying to demonstrate that myself. I like to trade bigger size, but I'm trying to show people with smaller size, it's okay to learn with a share, 10 shares, 50 shares. You don't have to, bet the farm on a new strategy. You can just paper trade. And if you don't like it, you don't like it. But I'm telling you, I've seen people from all walks of life enjoy this strategy. They're not, I'm not saying we're not trying to find the next Netflix.
No.
We're just trying to harness the power of small caps, which is they're horrible companies. So when they have good news, they go up a ton so that they can do dilution to come right back down.
Right.
And
It's all manipulated. Exactly. And I see people doing that in the chat room. Like you don't have to pay commissions on most brokers, so you don't have to worry about like Thinkorswim has options fees. Don't care about that. You can literally do one stock like on this. And see how it does, and I see people doing.
You lose $1 on a $1 stock to learn something new. There's no commission. It's great.
Right, no commission, and so there's nothing to lose. You don't have to paper trade it. You can use one stock if you want, or 10 or 100. And I see people doing that every morning, and they're like, "Thanks, Jason. That worked. That's great. I wish you'd used 1,000 or 10,000."
Right? Yeah. I'm not. So that's what I do. But right now, I'm trying to lead by example. So I'm showing people. It's okay. Take your time because it'll be here. We're not even in a bull market yet. So for about 2 months, I've been aggressively teaching, as you noted. When I transition back into, trading some size, which will be on the screen as well, I still think the problem is sometimes people get caught up. I've got 11 years of experience staring at small caps. Like, even if I'm a great teacher, which I am, I'll speed up the learning curve. My experience is going to be different than somebody's with 20 years experience, and it's going to be way different than somebody's with 1 year experience. So the point is, take your time and just know that I do have a master's in education. I did successfully teach for a decade. I know how to lay out a curriculum and to effectively teach a curriculum. I take this very seriously because people come here with the intent to try to make money. I can't guarantee that anybody will, but I understand people's goals. So I try to teach something that makes sense and that will work. What you do with it is up to you. But if you take it seriously, I don't think you'll walk away a worse trader. That's my opinion. I think you'll actually really see a different side of small caps than maybe you ever saw before.
Yeah, and I remember this morning, I think it was, you were saying in the chat, like, have you read these books and have they made you a worse trader? And it's like, nope, it isn't possible. It's possible. So Joseph's asking, is the chat room the Wall Street 360? And I don't think it is usually, right?
No, it's not. No.
Sometimes you do it in there, but probably
not in there anymore, just because I'm on the camera all day. I can't take all of 360. So what we decided to do was kind of tone down 360, and everybody's kind of gone into their own corner and doing their own thing, just because JW's got Market Navigator going around the clock. Ben's got his stuff going. Like, so if we all tried to shove that into 360, it just didn't work. You see how much I'm on camera, Russell. So I do it all in the lightning alerts room now. Tomorrow morning, I'll turn the camera on. I tend to leave the camera on all day long on me. And while it's a little bit intrusive to my privacy, I want people to know if I'm sitting here or if I'm not. So if you show up from work on your phone to ask a question, you don't have to wonder if the camera's off, if I'm there or if I'm not. The chair's either full or it's not. So from about 4 to 8 p.m., which is when the market's open, I tend to leave that on. Sometimes I turn it off if my boys are in the room and you don't need to see what they're up to, like doing gymnastics on the treadmill or something.
Yeah, and it's funny because you have the fireplace in the background there, and people like sometimes I saw them comment and they're like, "Is Jason alive? Is he frozen?" And then they look for the flicker of the fire and stuff. It's quite fun.
Yeah.
It's a great room. It's good community. I really enjoy being in there. I think there's
Thanks.
good traders in there too. Like they'll be talking about their
Yeah.
own ideas and how they're trading stuff. And yeah, overall it's really good. So well, let's wrap it up. That's been almost an hour and a half. Can you believe that? Like it's already just gone by. So 90 minutes just gone. Like
I've never been known to be short on
no,
words,
it's
Russell.
no,
I'm
it's
sorry.
fantastic. No, I love all the details and things. I just am very aware that you're going to be on camera doing this for another 10 hours tomorrow.
Yeah.
It's
No,
like,
I know that your audience has things to do and you do as well. So thank you so much for your time. And if
yeah.
anybody's interested, they can always, ask you or ask us. But you know where to find me. I'll be up and at it again in the morning, God willing.
Yeah, definitely. And so, guys, if you're watching this in the future, I'll leave a link to join Jason in the description below. If you're watching just now and you want the more details from me, feel free to email me, message me on the Facebook group. Just let me know, and I'll get you hooked up to get the best possible deal to come in and check Jason's day trading and swing trading service out. So, okay, yeah, thanks very much, Jason. That was awesome. And I'll see you tomorrow first thing. And
Sounds good, Russell.
Sounds good. Thank you very much, guys. Have a good night. Cheers.